So looking forward to this week starting March 30th. We're almost through March. It's been a pretty shocking month as far as stock markets go. In this video, we're going to look ahead to, of course, non-farm payrolls, which are this coming Friday, and how that affects the US dollar, which has actually been pulling back. It's had one of its worst weeks on record after soaring massively. Last week was not so good for the dollar. And we're also just going to ask the question, after the Dow Jones had its biggest three-day jump since the 1930s, we're going to just ask the question, is the bottom in yet for stock markets? Before I talk about all that, I want to quickly run down what's been going on in markets. As I mentioned, the dollar's been pulling back. The British pound has been staging a good recovery. Largely just improving risk sentiment has been the main driver. We've still got the downside risk for the pound. At the end of last week, we heard that Brexit negotiations had been more or less, the trade deal negotiations had been more or less cancelled. So, you know, that's one of the kind of economic downsides potentially. But more or less, the stimulus that was introduced, especially in the US, that helped improve risk sentiment. So currencies like the yen turned lower, the dollar turned lower. Riskier currencies like the Aussie and the pound were higher. We also had some some announcements from the UK government about extra stimulus too. In commodity markets, oil is still hovering around those very low levels. There hasn't been much of a rebound there. Gold staged a massive midweek rebound, well, start of the week you could say, but still struggling around that $1,600 per ounce mark. Stock markets, I will discuss in just a moment. So before we get into all that, let's just quickly mention the economic calendar. And so CPI from Germany, somewhat interesting. It's for March, so we're getting into the point now where March data is actually coming into the fourth, and so March is the month that we've just had. The coronavirus was already starting to affect economic activity. So a drop in German CPI, nothing close to deflation expected yet, but a pullback nonetheless. We have more manufacturing PMIs from the likes of China, France and Germany. They were all pretty dire from the first readings. We expect more dire numbers this week. And we have the ISM manufacturing number from the US, which also we're expecting to probably turn pretty significantly lower, particularly after those jobless claims that we saw. And speaking of which, non-farm payrolls, the consensus is that we actually see a contraction in the number of jobs in the United States by 293,000 after a expansion last month of 273,000. So talking again a bit more about the non-farm payrolls result, we can't talk about it without talking about those jobless claims from last week. Over 3 million jobless claims in the United States. Just goes to show the kind of shock that the US economy is facing. And while the US dollar has been acting as a haven in the last few weeks, we've seen some dollar weakness. It's mostly as a result of what the Federal Reserve has been doing to add dollar liquidity into the system. But the fact that we're seeing some very weak economic data from the US is obviously adding to the downside. And I think that will become the case even more so if we see a very bad jobs number here. So we're looking at over 200,000 jobs lost, and that puts an end to this record 100+ month winning streak for the US economy where it's been adding jobs. So obviously quite a milestone and not a good one that we wanted to see. We're expecting a negative number to probably be dollar negative and probably stock market negative too. But if we soon after start getting more talk from the Federal Reserve about extra easing measures, it's hard to know where they can even go from here. We've already had massive quantitative easing. They're backing up all sorts of markets from corporate credit all the way through to municipalities. Loans are being offered to small businesses. So all sorts is going on already from the Federal Reserve. So the next the next major steps would be some sort of intervention in the FX market, or just pure helicopter money where they print money and give it out to the citizens. But I don't think we're quite there yet. And so presumably without all that coming from the central bank, this bad data from the US should be bad for the dollar, probably bad for stocks too. Now I want to switch gears for a second just to talk about the US economy and the US stock market. So the Dow rallied 21% in just 3 days, which is quite astounding. It's the biggest 3-day rally since the 1930s. If you're going by a technical definition, then a bear market starts when you're down 20% from the high. A bull market starts when you're up 20% from the low. So technically we're in a bull market, but I think most people would agree the current conditions are not characteristic of a bull market. We've just had a massive rally. The question is it a sucker's rally? People suddenly start getting bullish because we've had a big move higher, but actually the overall context is weakness. I think probably that is the case, but I suspect we've just got further to go because we have priced in a lot of the bad economic news. And so I think probably the biggest driver going forward will be whether we roll over, will just be the infection rate just not declining in Europe and also in the US. If coronavirus cases and deaths, unfortunately, if they keep rising, then the expectation that we see a sharp contraction, then a snapback when all the cases tail off the way they did in China. If that doesn't materialize, then that just means we're going to have a slow or lack thereof of a recovery. And so at that point, stock markets are going to have to price in a worse case scenario than they have currently. So we're probably looking at a sucker's rally, but it might have further to go in the stock market. My base case is that we do see lower prices from here, but let's hope we retest the lows and hold the lows, in which case we can be a bit more confident about talking about a real bottom having been put in. Right, that's it for the video this week. Thank you very much for tuning in. And if you do enjoy these videos, please make sure to follow LCG on YouTube and social media.